Hey guys, I'm Nick. Welcome to my channel where I talk about stocks, personal finance, and investing for your financial independence. Today I'm going to be talking about stocks. More specifically, what is a stock? I'm going to tell you what a stock price represents and how to value a stock. First of all, a stock is a security or an asset that gives you ownership of a company. It gives you rights to its profits and also voting rights on decisions that are made in the company. A company has many different shareholders, so they distribute these shares to distribute ownership. Now, what does the share price actually represent? Well, the share price represents the willingness of people to pay for future earnings of that company, not past earnings or present earnings, the future earnings of the company. Now, what do I mean by that? Well, companies, they make money, and this profit is divided by the number of shares outstanding. And this equals the earnings per share, or EPS. Now, EPS is important because that determines how much you are willing to pay for the share. Now, one of the most important ways to determine if a stock is worth buying is by looking at the PE ratio. Now, this is the stock price divided by the earnings per share. Now, companies can trade anywhere from 5 to infinity, and PE ratio. This infinity would mean it has a negative earnings ratio. Now, we know that the PE ratio is important to stocks. However, it is not always the best indicator of whether a company is a good deal or not. For instance, Coca-Cola trades at a PE ratio of 20. That means 20 times their earnings equals their earnings per share equals the share price. And another company in the stock market, one of my favorite investments, is Tesla. Now, Tesla trades at, I think, around a 200 PE ratio. So 200 times earnings per share equals the stock price, the price of one share. Now, people would look at this and they would think, what? Tesla is such a bad deal. It's 10 times the PE ratio as Coca-Cola. But hold on. The stock price represents the value of future earnings. So Coca-Cola may be only growing at like 2% a year, or I don't know, 5% a year. However, Tesla, in my opinion, and analysts are going to be growing next year revenues of like 50% a year, and their earnings per share at, I think, 70% plus. So in a year from now, this 200 PE ratio will be like knocked down to 120 times price. And in 10 years, the idea is that Tesla's earnings per share will be so much higher than it is now that 200 is a good deal for the stock. Now, that is how to value a stock in extreme basic terms. This is my first video, so if you guys have any criticism or comments, just put them in the comments. Please subscribe and like. I'll see you guys next time.